Hi everybody, Nick McDonald speaking. Welcome to this week's ICE commentary market update for the US equity markets. Looking here at the Russell, and let's start with the monthly chart because we've started to pull back again. So we've got down, we're around about just above 800. 800 is actually quite reasonable support for the Russell. So it's not an absolute precise level, but certainly last month it formed a low around about 800. We've formed some highs back around 800 before, going all the way back into 2006. We really struggled to get above it, then we came above it, we found support there, we found resistance around that level again in 2007. We even had a little bit of resistance here, and then we broke up through and found support there. So 800 is quite key, and we're approaching that now. So 800 is going to be a key level. But if we break down through that, then the next level is going to be down around the 735 level, which is these old highs, and that's a really strong level. 800 is quite strong, but this next level down here I think is really strong, really precise, and also more recent. So in between those levels is where I'd expect price to find support. It certainly means we could pull back a little bit further, and that's always been on the cards, been on the cards for a long time. I'm not so confident on that pullback right now, though, being to that extent, i.e. back to 735. I'm thinking a more shallow pullback is on the cards. Let's just go through all of the charts and we'll have a look at the reasons why. Coming to the weekly chart, last week I was looking for this break up, which happened, but we broke up, and rather than continuing, we came straight back down and we closed the week bearish. So this weekly chart is actually still somewhat intact in terms of the uptrend. It hasn't really confirmed a downtrend yet, but certainly now, as we get a new weekly candle, if this week's candle starts to break down through these lows at 800, we're going to have a confirmed lower high. So this high here, at the moment it's just the high of a candle, but as we get the next candle and break down through the lows of that, if that starts to occur, we're going to have a confirmed lower high, and it will be starting to look a little bit bearish if that occurs. Now, it hasn't happened yet, it might not even happen, the week might be bullish, but if it does happen and does break down, and especially if it breaks down through here, through this previous low here, then we'll be into a confirmed downtrend. Coming to the daily chart, what I like about the Russell is still it's just really going sideways. It's not going up, it's not going down. It's tried to go in both directions, but it's just going sideways. We'll compare this to the other indices. So we'll come back to the Russell at the end and wrap things up, but let's have a look at the Dow. Now, that was a Russell daily chart which was going sideways. Look at the Dow. We'd kept on going up, and now we're going down. It's very different. The Dow is selling off, whereas the Russell is just going sideways. It's showing some real strength in the Russell. Now, the Russell has been going sideways since all the way back here. The Dow happened to push on up. It's therefore got a bit more room to sell off. So, that's exactly what it's doing. So the Dow's selling off a little bit there on the daily, but the weekly still looks really good. It's still in a weekly uptrend. We do have this previous low, and I'm just marking the line being this low here. That is going to be key as to whether or not the Dow breaks that. And then what we've really got just below that, not this big number of 12,000, but when we come and have a look at 12,000 on higher time frames here, if we just come and draw a line in at 12,000 right here, it's just another area where there's just been some really precise touches on this level in the past. It's a big number, it's a big figure, and 12,000 being quite key. And it'll be interesting to see if the Dow can break down through 12,000. It's only another 150 points away from where it is now. If it does, like the Russell, it's got an obvious place for it to fall to, down around 11.3. Notice that both of these areas, they are in that moving average buy zone, and the zone around the 10 and 20 period moving average. So again, on the monthly, we're getting closer back to those moving averages now, which is good, but we've got a bit of support down there around 12,000, and certainly a lot more as we approach, if we sell off further down to around 11.3. So that's around about where I think the sell-off would be capped. But at the moment, I'm still waiting to see, because there's still a lot of potential for this weekly chart to turn around and keep on going back up, for the Dow to find support where it is now. Just coming and looking at the S&P and the Nasdaq quickly. S&P also has been selling off. Remember, the Russell's been sideways, S&P has been selling off, but nonetheless the weekly uptrend still, for now, intact. So I can't just turn completely and utterly bearish right now. Looking at it on the monthly chart, major supports down around here about 12.20. That's where we could sell off to if we really start to sell off. But as it stands, not confirmed yet that we will be. Lastly, looking at the Nasdaq, and the Nasdaq too, coming to the monthly chart, has come back pretty close to its averages now, which is good. We've got the big figure here of 12.20, which is really a key area for this to be pulling back towards. 220, not 1220. 220, these old highs through here, these lows form through here. If we do start to sell off, then 220 is likely to be a place where we pull back to. Now, coming back to the Russell and tying this together for this week, It's a funny week. Normally I will give a view up or down, and actually this week it's more a case for me of I actually am thinking more of this sideways action, more of the same. The reason is because we don't look bearish enough to sell off massively on the monthly chart yet. We did going back here. If we just come back and look at how overextended we were, let me just zoom in here. And we look at how overextended we were back here, we were just going up and up, and we were a long way from the averages. And all that time I was saying we need to pull back and meet these averages. But now when you look at it, we almost have. We're quite close. The averages have kept on going up. The prices started to pull back. They're getting back into a sensible place for the markets to continue higher from. So I'm not expecting any major sell-off, and I think if there was going to be one, there's been enough catalysts lately out there with earthquakes and all sorts of natural disasters and bad economic figures that if the market was bearish enough, it would have sold off by now heavily, and it's not doing that. Actually, we're just going sideways. Even the markets like the Dow that have sold off, they haven't sold off massively. I don't think there's enough bearishness for a major sell-off unless there's some other major catalyst comes in, which is bigger than the ones we've seen so far. I'm expecting more of this sideways action, just consolidating until this monthly chart actually catches up, i.e. we probably consolidate and the averages might catch up a little bit more, might mean another month or two of sideways action before we really push on. Now of course it might just be a week or two, or we might push on soon. We'll see it in the candles, but my longer term view remains bullish. I still think we're going up for the longer term. I think we'll finish this year a lot higher. In the shorter term, I'd be looking more at intraday trading strategies. And I just want to remind you of one thing which I've talked about in the past, which is the gap closes, which I often look at when markets are somewhat sideways. And here on, just looking at the last few weeks gaps or the last few days gaps, had a big gap down. We didn't close the whole gap, but we certainly had a really good rally up here to come close to closing the gap. Day before that, there was no gap. Day before that, no gap again. But just come back and have a look here. So okay, big gap up, big gap close. Even on this was a public holiday, but still gap up, gap closed. Coming back again, gap up, this one didn't close. Coming back here, gapped down and closed immediately. Now these for intraday traders provide really good opportunities, and I trade those every single day. And it's particularly good when the market is sideways like it is now, and when for me my view is it will continue sideways because I now don't have any position on the Russell or on the index markets at all for the medium term or the short to medium term, i.e. I'm not holding them on a swing trade basis because I don't see any obvious direction as to where they're going. But I will more aggressively go on intraday trade, and things like that gap play continue to be good in both trending markets and ranging markets, but it's particularly good to give you something strong to be doing in ranging markets, and that's why I really like that gap strategy. It's also very high probability, which is what we all want as traders. Hope that helps everybody. Happy trading, and let's see how we're looking next week, and we'll see if these candles have changed direction to give us any really strong bullish or bearish bias.